right? Chicago's finest, guys. Welcome back. Welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. Every now and then I go down that memory lane. You know, I play some Common and I'll play some Kanye before he went crazy. And, so we got plenty to talk about, I guess. I don't know. I've been hiding out. I actually was only going to go live for like 30 minutes. Like, that's all I'm going to do right now. I'm only because I'm busy. I was a rocking and a rolling in a, it was an earthquake. So I'm about to hit live, and I'm making a video about Coachella because some dude pissed me off. Some right-wing Trump-supporting son of a gun. You guys know how I feel about these Trump supporters. These dudes, man. So I made a video, a little 4-minute video. Bros, let me tell you, dude. If you look at it from the back, it's heavy. I swear to you. And Tony De Niro, what'd you say? I said it, Tony. Stop staring at me, bro. Listen, I'm going to tell you right now. I got GameStop in my back pocket. This is why, okay? I got GameStop stock in my back pocket, bro. And it's just bubbling up. 27 never looked so good. Are we talking about 27 right now? Watch, I'm going to show you something, okay? Here's a chart. 26, 26. And now I drew these purple lines. Not to be confused with white lines. I drew these purple lines. Check this out, bros. Just check this out, baby. Do you see us? We break out, and then we bust down, and then we break out again? Are we really going to have this breakout right now in the after hours? But this is a smaller triangle time frame. This Dorito was derived from nothing. It started out from a manipulation of the stock itself, because technically this short shouldn't exist. This short shouldn't exist, and this should just be on an uptrend all the way through here. But, you know, I got to deal with the world being short. I got to deal with the world doing nonsense. But I still like GameStop from this standpoint. If we take away this, and we're left with this. If we look at these highs versus lows, and we look how we're rising always, this yellow line is our real, true support all the way down at the bottom. And I actually even pulled up Bollinger Bands a couple of days ago with myself, and I said, okay, so the lower side of this Bollinger Band is down at 20.43, mid is 24.07, top is 26.24. So how tight that is, that spread itself around $6, $5, you're going to see it can go crazy. Now I've seen GameStop get really tight and then get funky out of nowhere and get way out of whack. So I think GameStop's looking great. And I don't pay attention to Bollinger Bands so much. I really don't. What I pay attention to is GameStop coming down as what they call a death cross right now. But it's not a real death cross because this was a manufactured death cross from the shorting of the stock where shorts tripled down. Okay, if you guys don't know, first I'm going to show you this. Let's go to the weekly. Weekly chart looks healthy. What happens on the weekly here is you realize we bought in on the green. Okay, we bought in when it shot up. Everybody believed in the stock. Everybody still does believe in the stock. They all bought it. Now, this was their time to short. We saw them short this stock right about, right here. So right here is when you had a little bit bigger volume right here. This red day right here is when it got pushed down, but it didn't get pushed down off of like real selling. And I tell you that because if you actually track, let's go ahead and track the OBV. So you'll see right here, we actually bought the shares. They shorted us down, this little ramp here, shorted us down, and we're like, okay, but we're actually buying into the run-ups. Buy into the run-ups and hold, and that's exactly what we did at 6.5. So we, volume-wise, nothing here mimics a sell-off. Okay, when the price goes down, let's say you have a red day. On any given red day, you traditionally, the psychology of us investors would be to sell off. Your market is dropping, it's selling off. You got to get the hell out of here. On red days, you sell, right? That's just the way it goes down. To give you an example, this whole market sold off, and it went up from about 25 billion all the way down to 22 billion. 3 billion on volume for the SPY itself sold off in a week. 3 billion. And it's supposed to sell off because it's going down in price, and this is where Wall Street says we're out of here. Are they really out of here? Absolutely. They're really gone, guys. It's really setting up that way, and people will tell you, I don't know, Marantz, it looked like we had a rebound day on a Monday. I'll remind you it's Monday, Tuesday, Wednesday. I'll let Trump keep talking like he's been talking all week, but you're not recovering. When they say it's the greatest, like Trump, I can't believe he says this shit sometimes. It was the greatest week in the Wall Street for the biggest gain ever. He said something crazy like it because somebody told him historically it was the greatest week ever. Yeah, historically. What was the week before? It's just evening itself out. There's a reason why these two candles look the same. Okay, one is marking you down, one's marking you up, but you're still not as high as you were previously 3 weeks ago, and you won't. You won't ever get there. On the daily itself, do you see the death cross happening? This is a real death cross. This is a real sell-off. This is not that GameStop mimic shit. We cross today, come tomorrow and the next day. Those indicators are real, and Wall Street's going to see it, and Wall Street's going to go ahead and sell, sell, sell. It's coming. I'm sorry to tell you this. The pain is coming for this market. You guys can believe me or not. Historically, when the 50-day falls below the 200-day moving average, this has not happened since 2022. Now, since 2022, it has not happened. Okay? That means the green line on the moving average falls down below this yellow line. That hasn't happened since way over here. Right here, and this would be March of 2022. Do I have to remind you what happened right after that? The market itself fell out from the bottom. It fell from 4,600 points all the way down to 3,400 points. Yes, it lost 1/4, 20% plus. This is when you should have been called a recession. This is when the Fed should have come in and said, hey, this is crazy. What we're really dealing with, we're in a recession. They didn't say that. Because there are true definitions of recessions, whether it be 2 straight periods of negative GDP growth and the way they market, I don't care. You guys can tell me that we have jobs. You can tell me that we don't have this inflationary rate. I'm telling you, I'm the consumer, and I live in the real world. Half these guys that are actually in these jobs where they don't have to go to the work, they don't have to go to office, those jobs are being deleted right now. This administration is taking away the free check. So a lot of people are going to be filing for unemployment after severance packages run out. A lot of tech companies have actually readjusted their guidance. And so a lot of retail companies have adjusted their guidance. So if retail companies and tech companies are falling off and they're saying, no, this is not really a great economy, you'll see what catches up. You'll see the cart before the horse, or the horse before the cart. It'll happen. It'll happen. Give it 9 months, but you'll see this whole stock market sell off. So the sell-off that happened here after the death cross happened, which was in March, it officially hit the full bottom in October. So it took 6 months. It took 7 months to officially come all the way down. And then you can start rebuilding. But at that point, this is a fake pump, if you know. This was a fake pump to show a recovery for the election. They were trying to show you that we have resilience, that we have all this. And that's where all these programs come from, all this free money come from. And the market went up and to the right, and it can't stop going up. Well, it's going to come all the way back down. I'm just telling you now. And what tells me that? Marantz, how do you make this? Okay, I'm going to tell you how, because these are like, literal guys, pay attention, please. This is going to be, I guess, a learning curve for some of you guys, but you guys should know this stuff. Let's just look at S&P. Let's go ahead and look at some, not indicators, let's look at, well, we can do a trend line. First, look at the level here, okay? We came down to this level here, the true correction. When you corrected all the way down last week, your bottom was the actual previous resistance. Okay, if you look straight across, you'll see that we actually touched the top. It's like perfection. Guys, this is like symbolic. You come jump and you touch the top of what the previous resistance was, and now that is our true level of support at this moment in time. The unfortunate part is you're going to fall below it. You're going to come all the way down, and as you zoom out, as we look at the whole market and you see it here, you're going to fall down somewhere down here where the true level of support was prior to the public pumping of an election, and this is a COVID bottom. This COVID bottom means so much to a lot of people because you'll see these peak points of the dot-com bubble. You'll see a peak point over here of the Great Recession, okay, of the Great Financial Crisis. The true correction is that they built the whole economy, the whole world, off of this run. And this run, that is trending, this run has been the same on a level of support the whole way. The whole trend line has run its course. But if I actually take it back to the weekly, I'm going to show you this trend line, and it's going to blow you. It's going to blow your mind, or it blows my mind. We're going to go right here to 2022, and we follow it all the way through. But if you go through, you'll see that it's something that badass trader once taught me. He says the more times it runs through, tells you a true factor of like what it is, right? I use GameStop a lot because whenever I look at GameStop for trending, I look at how many times it had touched the roof before we actually broke through. 1, 2, 3, 4, 5, 6, 7, 8, 9, and then it broke through on the 10th attempt. It literally was like, hey, this is your roof. Here we go. We get pushed down, and we finally break through. Something like the SPY that keeps touching the ground. Touch, touch, touch. Way up there inflated, but then touched again. It's touching the ground. Boom, boom, boom. Eventually, it's going to fall through. And when it does fall through, it's the complete opposite of what GameStop's doing. It's going to just be it's going to be a nightmare for everyone. So look at this orange line here. If it actually comes back to it on the monthly, sure. But if it comes back to this orange line, it comes back to the daily. If it actually comes down and it breaks past, there's no catching it. There's no catching. I'll see you all the way down to 400, like I told you guys, and the 400's right here. So this is the previous support from that recession that you had. That's just the truth of it, guys. That's the truth of it. It's simple TA to look at, and that's what's happening on the market itself. But Bitcoin's still doing what it does, pumping a little bit in and out. Let's go to the daily. It's never going to get back up here to 109 anytime soon. Reason why it's not going to get back to 109, that was your pump all the way through the new administration. And now the administration is here, this one, with these tariff fears, as they call it. It's crazy. Tariff fears and really don't matter to me because the announcements come out and they go, oh, yeah, by the way, semiconductors and iPhones and iPads, they're exempt. It's like, are we like just doing fake stuff? Are we just like fake fear? Is that what we're doing? I mean, Taiwan's not going to pay anything anyway, but I'm just curious like what we're really doing. I did see Bank of America post, and Bank of America posted that they wanted to have everyone short the damn S&P. Bank of America, I don't know if it's legal to do it that way, like for you to post and say short something, like actually giving out financial advice without posting your position. But yeah, I don't believe anything I read. I just don't. It's hard because I remember Bill Ackman during 2020, during the pandemic, he comes out and he goes, the whole world is selling. The whole world's burning down. We got to run. And the truth was he was betting the top side of the market, not the bottom. Because they already knew that they were getting bought out. They already knew they were getting saved. There are rumors right now going around on Wall Street. If you guys are not familiar, it's with a true $2 trillion buyout for private equity. For the shorts, for everybody. Everybody's going to get a meal ticket out of here. They say the Fed's going to go ahead and readjust, and so is the administration, and they're going to print out, and they're going to save $2 trillion on the market. Guys, it is a rumor. I know nothing about it. I will tell you, I've read every headline. Jay has sent me every video you can imagine about this, and I will just tell you, I'm not going to get lost in the sauce. I'm going to pay attention to GameStop. I'm going to stick with it because I know what it is. I know that GameStop has a PE ratio below 80. It will, again. And it's going to keep making profit and money, and there's a lot to look forward here. GameStop's PE ratio is coming all the way down to 55, 56. That's what it's coming down to. So the prices of 26 is pretty amazing. I like that price. I bought some this morning. If you guys did not see my buy order, people ask me all the time, how do you invest, Marantz? Or like, how do you pace it? I'm going to tell you something that like people don't realize is like, if you took $10 out of every trading day, $10, that's all I'm telling you. And all you guys want to run to it. You guys are all, I'm going to miss out on this monster move that's going to happen, and I could have made money. You're thinking about investing the worst way, the wrong way. I want to just explain it to you guys because I want to show it to you. Let's talk GameStop for a second, okay? And this is all about investment thesis and philosophy and how you look at it. Everybody comes to me and says, Marantz, how long you been in GameStop? 4.5 years. I've been in it longer than 4 years. I've been in it for a long time, and I hold the shares and I don't sell them. And then they say, "Whoa, you didn't sell on the run up 120?" No, I didn't sell when it hit 120. I didn't sell when it hit up here at 340 again. It's hit 340 3 different times while I've had it. The equivalent of 340. If you guys are not familiar with math, but there was a 4-to-1 split. So yes, But we've all been there when it hit 347 two times in 2021. And then, of course, it hit 76 a share, 70, 80 bucks a share in like last year during May and June timeframe. So, yeah, we were like, okay, we got a lot of money in there. But did you sell at the top? No, I didn't sell at the top. Why didn't you? You could have bought more and you could have bought back in. No. That's not how it works. And I'll tell you why that's not how it works. Because when you sell, that's like a finishing assessment. It's like, you know what? I sold. I'm done. Or I'm selling to buy more. That's kind of weird. I would actually go to work and make more money just to buy more. But the fact that I buy in every day and what that does for me mentally, it changes the way you invest. And I'm going to explain. The lowest it'll ever go, as it goes low, you're buying a discount. You're getting it. Boom. The highest it ever goes, you're supporting your investment. You're buying more. But ideally, you're in the money. So if I've been buying it for 4.5 years, at $26.29, I tell you that the average is around $24.70. That's the average of GameStop over the last 4.5 years. That's my average. Because that's what I've been doing. I've been buying it every day, slow and steady. So the ebb and flow of the markets don't affect me as much. They don't affect me at all, actually. Doesn't matter what happens. But when the stock price does eventually rise all the way up, I rise with it. My wealth keeps accumulating. It keeps going. The more I grab, the better. And yes, I know, dollar for dollar, I might not be much up as other people, but I'm just going to tell you what they're doing with their dollars. With all the winnings in the world, all the money in the world, what are you doing with it? I didn't invest money into the stock market to substitute my job, my career. I don't have these dreams of saying, you know what? I'm never going to work again, and I'm going to have a boat, a yacht. You know, everybody said, I'm going to go buy this Lambo, and I'm going to buy a yacht, and I'm going to buy a helicopter, and I'm going to do it. No, that's not what I'm doing. I'm doing the real thing here. I'm investing money into a company that I enjoy, that I respect, that I actually enjoy the investment. And then I'm letting it play out. But at the same time, I'm going to keep putting money into it because that's when you make sure. I don't understand these guys. I got a cost average of 40. I'm like, what are you talking about? I got a cost average of 35. What? What's going on? I've been holding for 4 years. Okay. So you never bought again? Like, you could be buying right now in the 20s and your cost average could be coming down. You DCA all day. Yet you DCA with everything in life. You DCA with your 401k. You DCA with your spouse and your family. But you won't do it with your own investment. The one thing that's actually going to hold its value for you. That's why we invest into this market. There's companies like GameStop that are severely undervalued. And they have the potential to go ahead and go 10 to 20x. Well, guess what? If I can make 10 to 20x on the money being put in for decades, that says a lot about me and my wealth. But all it takes is one bad investment, one loss, and you wipe out clean and you got to start all over again. That's not what I'm doing. That's not what I'm doing. You guys want to know this whole chart? I'm the bottom of the chart. I'm the one holding it up. Me, myself, sure. Are there other people like me? Absolutely. But it kills me every time I see somebody say they're going to sell when they don't understand what the investment really is. The other parts of the investment that no one talks about, right? They go, hey, Marantz, GameStop, when it hits $35, I'm out of here. When it hits 35, you're out. Okay. So what does that got to do with me? That means another investor is going to get in. You're going to have to sell them to someone. Someone's going to buy those shares, and they're going to understand the value of them. And they're going to profit off of it, which is fine. When the stock price goes down, there's a reason. Like, literally, there's a reason. We'll be down, on a given day, like after earnings, after we post the best earnings we've had in 6 years. We have tons of cash on hand. We have great leadership. Everything's headed up and to the right, all the good info. And then it's down from 29 all the way down to $20. You go, what? It's down $9. I don't understand. How's it down 30%? Well, the part that people need to understand is they're short it, right? They short it. They attack it. And when they attack the stock and they short the stock, it's because they don't have many options. They could turn and go long. No, they triple down on that short. The triple down on the short is there. Certainly last year they doubled down. Now they triple down. Where else can they go? Either you admit defeat or not. Where so much of the market has gone digital, what's driving the price? Schoolboy Jew, how you doing, man? The question he just asked is absolutely ignorance. So much of the market going digital. Who sells physical? Have you ever asked yourself? Only GameStop sells physical. That's one. There's a market in itself. GameStop digital and or physical only makes up 20% of the sales they actually do throughout the whole year. Literally 20% of their total addressable market cap that they do, the TAM for them is 20% of their profits. So top line revenue comes in at 20%. That's it. You're judging and putting a characteristic on a company based off of what they do 1/5 of the time. They sell more Pokemon cards than used video games. That's what I'm trying to tell you. It's changing your identity and changing the way people view you, and then they'll understand the value proposition. How about this? Who gives a shit what they sell? Who cares about one product that they sell? I care about money. And if you care about money, then you would understand that the leadership at GameStop, one, doesn't get paid money. They don't get paid dollars or shares. They don't get paid any money at all. They're the only board of directors in America that the only profit they make is based off of the investment that they do to this company. And the way they run this company merits a return on their investment. That's it. It's called rewarding your shareholders. And they just happen to be the biggest shareholders. So yes, that is a company driven off of results. That is profit. Now, albeit, I get it. Wall Street does not agree. Wall Street does not give them fair value. I'm okay with it because I'm getting fair value for the investment that I'm making at this current time. But if my insiders, the CEO, the board of directors, all of them are buying shares right now at this price, at this elevated price, which, by the way, is a 130% increase over last year, they didn't buy it at 10. They didn't buy it at 13. They didn't buy it at 14. They bought it now. They bought it at 25. And why did they buy it now? Because they're allowed to. After they've put everything into place, all the partnerships, all the cutting, all the trimming, all the adjusting, now they see the vision. You see the plan. And what's the vision of the plan? Profit. Profit, period. Doesn't matter. At the cost of nothing. They didn't cost you anything. As a matter of fact, the store directors got $28,000 worth of shares just for being a store director. Mind you, there were 4,000 GameStops 2 years ago when they did that payment plan. There are now 2,000 plus. So, yes, half those guys got shares, and they got paid for it and compensated, and they're no longer with the company. But you know what? Vested shares, they can go ahead and sell them off and go from that route. And a lot of them actually are managing more than one store, more than two stores, and doing their thing. So, or maybe you get promoted from within, and maybe you get paid a little more. But building culture takes time. I can't walk in there and tell these guys who are at the bottom of the retail food chain, hi, welcome. Welcome to GameStop. Welcome to the best job in the world, and you work for the greatest company ever. They have no idea. You walk into a GameStop and say, do you know who Ryan Cohen is? They don't know. How do you not know who your board of directors are? How do you not know who your CEO is? It's your boss. You should know. But that's the culture that's changing. We know as investors, and we know as consumers. You have to know the identity. You look at companies like Target. Target has a shrink of 1%. 1%, over $1 billion shrink for Target. They have a market cap well above $50 billion, and they do tons of sales. They have no cash. Their cash is less than GameStop's cash. They're losing money. They lost over $1 billion 2 years ago. GameStop lost $650 million 3 years ago. They now have a swing profit of that. Well, they lost 530 and they have a swing profit of 100 or 650 million. That's just telling you that the right people are at the helm. That's all I'm telling you. Look at the chart, guys. This chart hasn't gone down in years. 4 years. Erase the top of the chart. Just look at the bottom for me, please. If I could black out this whole triangle here, this whole deal here, and just look at this yellow line, and then this is you, and this is the stock. Just keep looking at the yellow line. For the rest of your life, I don't want you looking at the red and the green. Just look at this yellow bar right here, all the way. And you tell me 20 years from now, I don't know where you guys want to be. I'm just going to keep going. I'm at 1,700 right now. That's where we're at? Yeah, let me lower it down just a tad because it fell off a little bit. All right, there. Is it right there? Right there. Monthly. Let's do the monthly chart. My bad, because I was on the weekly. It doesn't program out right. All right. Monthly. Here's the monthly. You tell me. It's inevitable. 2031? 2031, I got you at $1,200. Right here, 2029, I've got you at $180 a share. 5 years from now, GameStop's going to be $250 a share. So easy. So keep doing what you're doing. Buy, hold, whatever. They don't understand that by people buying shares at these prices and holding on to this company, you're now a $12 billion company. I remember when it used to say $4 billion. I remember when our assets were only $3 billion. And then I had to read a headline from somebody saying, Marantz, the only reason why GameStop has value is because they diluted. And I said, what? They diluted their shareholders? Hold on. NVIDIA has 24.9 billion shares. 24 billion shares on a float. Apple has 16 billion shares. Palantir, 2 billion shares. AMC has the equivalent of 4 billion shares. GameStop has 400 million? 400 million. 446 million. To offer your company to raise capital, and at the prices you raise it at. To give everyone an example, GameStop raised $1.5 billion off of a price point of $29.85 per share. With the conversion rate 30% beyond that at $38.81. Those senior notes tell you what everyone should tell you. One, the company's not going bankrupt. They can't go bankrupt. They have more cash than the cash they asked for. They could pay it back whole today, right now, and they lose nothing. It's 0% interest. And so they did these senior notes. They offered up their company, which in turn increases your shareholder equity. Do you know what happens to the stock price as your shareholder equity goes up? If every share that I sell of GameStop is at 0%, essentially, what's the average of the $1.4 billion that they just sold? They sold $140 million. They sold 140 million shares just last year during a run-up when the stock price on average per share was around $28. It was their average sell. Does anybody understand what that means? That means every dollar that you're spending on GameStop is below what other people are buying in and what they're offering the company for. And why is the threshold 28? Why is the threshold 38.81? Because with the increase in float and your compounded interest that you're going to, compounded profit, compounded interest, all of it, it's all going to accumulate to one thing, the S&P 500. If I'm investing into companies, I'm looking for the best investment that I could find, right? I come to you and I say, hey, man, I got this great company I want you to invest in. And they're like, yeah, what is it? And you go, it's Amazon. And you're like, Amazon? Hell yeah, bro. I want to buy Amazon. Matter of fact, I want to buy Amazon because they no longer think about Amazon, okay? I want to show you something about Amazon. This is the monthly chart. Wait till I show you. This is Amazon, guys. I want to buy Amazon. All right? But now when I buy Amazon, right here, I buy Amazon, they go public in 97, right? They're going to run. And they're going to run all the way up into the dot-com bubble, but they're going to be the equivalent of $5 a share as of today, right now. This is the equivalent. So I could buy Amazon. Next dot-com company, they sell books online, by the way. They sell books. Goes from $5 all the way down to the equivalent of 28 cents. It's a terrible investment. You should never make it. 2001. You know what happens after that, guys? Up and to the right. Changes identity, sells other things. Greater financial crisis comes. Guess what? Worked its all the way self up to $5 again. Jumped all the way back down to $1.70. What a great buying point right here. Greater financial crisis. From that standpoint, all the way through the roof to 242. Now back to their level support of 180s, right? 153 if they fall apart. We'll see it all test out. Here's what I'm talking about, Amazon. Guys, I should buy Amazon right now. It just went from $1.70 during the GFC, the Greater Financial Crisis, and over the next 15 years, it did 100x. More. But I should buy Amazon right now today, right? Should I buy it today? I meet people, they show me their portfolios, and they have Amazon in it. 10.6 billion shares afloat. It's at the peak of the history of this company, but it has everywhere to go but up, everywhere to go up, apparently. I should be buying the top of the market right now. I shouldn't buy something that 20 years ago was $1 equivalent or $5 at the max. No. I shouldn't do that. I should buy this now. Now that it's already in the S&P 500, now that they're the top retail company in the world, I should only buy things at the peak, I guess. Let me buy them once the whole world knows what they are. You know, you want to buy things that are outside of the S&P 500. That's what you want to do. You want to buy things that are mid-cap companies. The S&P 400 is where you want to buy. The S&P 400 has multiple companies that are established, that make a profit, that still have transition and growth. And those companies, when they graduate to the S&P 500, have massive influx, like from stock world, right? From everyone. It's like, hey man, this guy graduated college. Now he's ready. You want to buy every company as they're walking to the S&P 500. Right before they do. Don't ever buy it once it gets in. That's on you, but still. Just try that out for me, guys. Go look at the mid-cap companies in the 400 and get the best ones and see if you believe in them to get into the 500. Anybody want to know what's the best company in the S&P 400? The number one stock? Cash on hand, $6 billion. Shareholder equity, 6x on current ratio. 6 times more assets and liabilities. Simple math, pluses and minuses. Board of directors, they don't get paid a single dollar. It's a great business. It's about money, right? Well, guess what? They have a lot of it. They have so much money they could buy controlling stakes into numerous companies, certainly when the stock market crashes. Brian Cohen's going to be able to walk in. You know, he has $1 billion at GameStop right now. He has $1 billion at Alibaba. He's got $3 billion of Apple. He can walk in and go, you know, I'll take some of that, and I'll get 2 of those. I'll get 3 of those. And he makes those companies better and a great influence on them. And remember what I told you guys, because everyone's going to steal this idea and this message I sent to you. I can already hear GameStop on Twitter stealing all my stuff from yesterday. They watch my videos and they go and have spaces calling me, you know, I think the real transaction, the real history here is that you want access to GameStop investors. And then the way you do that is you just, you know, you put your name on it, you put on a buy line, code line, and you say, that, yeah, you're going to get access to them all, man. That's what's going to happen. You know, kind of like GameStop and PSA. You know, PSA wasn't even nearly the company it was up until they partnered up with GameStop. Now they did an extra $1 million, extra million cards they had to grade. Yeah, millions and millions of dollars. They had to hire more people to do it, more buildings. Man, I'm telling you, PSA is the picture. It's the benchmark. It's the role model. You say, you know what? Look at this. Here's a company that partnered up with GameStop and got access to their investment base. These guys are psycho. These guys are crazy. They're awesome. It's us. It's not just PSA. It's anything we touch. From this moment on, from this moment that you're alive right now, I'm telling you, the identity of GameStop and that consumer is going to get attached to a lot of other companies, a lot of other products. And you guys are all going to invest in them. I know it. I'm included. That's why I shop at Hosco, right? Hosco, right here. BeTheHos.com. No name. This is a no-name clothing company. No name. You know what they do? They take their corporate funds, their business money, and they invest it into GameStop. Their reserve currency is GameStop shares. It's not Bitcoin. Their balance sheet is not backed up by GameStop. And they don't care. They're going to buy more of it. They're just going to keep buying it. I've seen it with my own eyes. I said, wow, you guys buying GameStop with your corporate funds? This is awesome. So what do? I go buy clothes there. I got to buy clothes anyway. I might as well buy clothes there. I'm still waiting. I haven't eaten in about 4 years, guys. So when you guys see somebody who wants to sell some food and they want to support GameStop, I'm down. Anyway, it's just a way of thinking. And it's the way I think. Okay? Just want you to know that. Who won the damn Masters? Rory McIlroy? Rory! Looking all yoked, bro. Damn, bro. That guy walked around like he'd been benching and powerlifting and the power cleaning and everything for weeks. That dude looked like Tiger. Just buff as hell, just hitting the ball. So I didn't like his crying face. His crying face was gross. That's about it. Why am I looking at Apple? It's GameStop only, bros. Right there. Look at the minute chart. GameStop looking healthy. Don't worry. I'm waiting for this market to sell off tomorrow, the next day. You'll see exactly what I'm talking about, guys. It's going to happen within the next month. Book it. Book it, Dano. Book it right now. Within the next month, the S&P 500 will come down to its knees. On its way down to its knees. I mean, it's going to come down. That's what you call your knee. You go like this. You ever see somebody go like this? And they go, what is that? I need you to do me a solid real quick, bro. I'm on my knees here. I'm on my knees. S&P's coming down. And I know it, and you should know it too. So right here. There's no doubt this thing's coming down. Go to the daily. Look at the daily. It's crossing right now. Oh, babe. Just wait. Just wait. GameStop's looking great, though. Going to go retest that top right there. GameStop's going to go retest the top of the mountain. Top of the mountain currently sitting at 28.55. So we'll see when it pops and it touches. As the days go on, the roof gets smaller. But we'll have this breakout somewhere around here. I always anticipate it happening a little early, somewhere around like May, the end of May. But it'll happen. And maybe Roy Kitty, that's why he's been buying these calls, way out there. Hosco is going to be the new Louis Vuitton. I'm down. The S&P dropping to its knees faster than TD. I didn't say it. GameStop is King Midas. Sure. Everything they touch turns to gold. Marantz, did you feel that earthquake today? That was actually GME's rockets warming up. Yeah, I was on the mic, bro. I was actually making a video and for TikTok or whatever, and then the earthquake happened. And I don't get excited for it because my phone, actually, I got the alert. This is crazy technology, by the way, guys. I got the alert in my phone. It says 5.7 earthquake just hit. And I was like, they're like, near you. And then my damn house started rocking. And I was like, oh, okay, that was good. That was good. It was a good little earthquake. 5.7. I mean, I'm sure some people got scared. I don't care. My daughter hates earthquakes. My daughter hates spiders and earthquakes, bro. But she's going to Coachella next week. I saw AOC had a little rally. 35,000 people in L.A. It didn't look like 35,000, but I'm happy for her. She's going to be running for president. Is that what she's going to do? She might be the first Democrat that might get the vote for me. I'll tell you right now. Whew, shit. I mean, not the political polls, but she get a different, never mind. Hey, guys, I like AOC. I like her a lot. AOC's a quality, she's a quality person, bro. Oh God, you can't compare. And this is no jab at anybody here or anywhere around. Should I even say this? No, I'm not gonna say it. Just something about conservative women that my wife, when the day my wife put on a Trump hat, I was like, yo, hey, what's up, baby? Trust me, friendships were fractured. You just see people in shambles around me. Oh, like, yeah, whatever. We're good. I'm looking at something else, though. Tons of headlines, but I stay out of them. I try not to get too caught up in, rumors, which are everywhere. They're running rampant. It has a lot to do with the fact that the Fed is trying to price in the tariffs and the effect of the tariffs, and then you can't. You can't. But I did see this headline. It said that the Trump chaos prompts big pension funds to cool on the U.S. It means they're not going to be investing money into the U.S. Which, okay, and so Denmark and Canada are not going to invest money in the U.S. They're already here. They're buried in it. I never knew what a is a crone. Is that what it's called? A crone? I never knew what that was. A crone. I saw one the other day. And I go, what is this? And they're like, it's like 20 cents. It's like a quarter. I'm like, oh, okay. Somebody walked in and paid in crones. I never knew what it was. Should a different. Yeah, there you go. Stop it, bro. So you guys are too much, man. Too much. I give you like 2 inch. Oh, never mind. I can't even say that. See. Never mind. So gold. Gold went up the fastest it's ever gone up since the great financial crisis, whatever it may be. But we're not having a crisis, right? Gold is pumping, and it came down, went back up. I actually had it on the chart here. Let me see what I have. Go to websites, and let me go gold. Okay, so gold right now, 32.18. I say it's pumping because if you look at the 5-day, gold's up 7%. That's crazy. That is absolutely crazy. I've been doing this a long time. Never seen gold go up like that. Oil's flat, down 1% over 5 days. But, you won't see that at service station for a while. I did see this thing right here. This was sent to me last week. I forgot to go over this. This is going to be high risk, bust out report risk. The top 3 S&P 500 companies at the highest risk for a bust out. It means leveraging themselves to bust out. Warner Brothers is 1. Paramount Global is 2, and Caesars Entertainment. They're all private equity plays. They all have a Paul. They all have nonsense in them. And so, yeah, I would agree too. There's impairment charge of $9 billion. The debt load is $40 billion over here at Warner Brothers, carving it up, kicking it down. It's gonna be a problem. But they will end up going bankrupt. Same thing with Paramount. If you guys aren't familiar, Paramount went ahead and had that partnership where they're trying to get bought out. But these are all companies that have overplayed their hand for years, whether it be CBS, MTV, Paramount Pictures, and the app itself. I'm looking at Lionsgate. Lionsgate is the next one I see coming down, and we'll talk about Lionsgate on another show. I'll do it. Caesars already fell apart. Caesars was over $50 billion. Now they're at $12 billion. No, they already fell apart. And this is like an AMC type play where everyone's in it. Everyone's just grabbing their assets and coming in and out of it. I am looking at the Wynn. The Wynn Casino is another one I'm looking at. I'll remind you guys that on the 28th, in about 14 days, Wynn Casino's employees are getting stock for compensation for the anniversary, but they all get it vested immediately. So they actually get to sell off a portion of it. So they're diluting their shareholders. They're paying in stock instead of cash. They're doing all the above, but they're on like this downward spiral, the Wynn Casino. So I'd be very careful about Wynn if I'm an investor in casinos and going that route. Other things, GameStop the website. GameStop the website looking pretty good for Pro Week. Like I said, from the 13th to the 26th, plenty of stuff on sale. I like that they had the Raptor 8 for only $50. I also did see buy one, get one free on the collectibles, accessories, and board games and homeware and stuff like that. So that's pretty cool. If I look at the trading cards, what I'm noticing on trading cards, guys, and this is all because I do crowdsourcing. I get all this info from you guys, and then I go in and I evaluate the way I do it. Oh, look at this Charizard card. It'll be gone by tomorrow. $235. Not bad for a PSA 9. But you'll see that they have over 2,400 cards right now. So 2,475. That number keeps going up. It once was very low, like 1,500. I can't remember how low it got, but we're now at 2,500 cards essentially, and we're going to keep going up. That actually increases our value, believe it or not, because even if the cards don't sell at full value like right now, they appreciate. They don't depreciate. A lot of them. I'm not saying all of them, but a lot of them. The only ones that really fall apart are sports cards. Sports cards fall apart based off of performance. So if it's a rookie card, yes, that should get out of here. Oh, man, I got to go. I didn't even know it was already that time, guys. It's already noon. Damn. I got to be at work soon. I got to get ready for work. But I appreciate you guys. I was just hanging out. And no real headlines coming out of the White House yet. No real headlines coming out of this market yet. But for me, 2637, I like the stock. I've never been more bullish at a potential turnaround for a company. You guys don't know where that comes from. I'm sorry. But let me give you a YOLO update for me. Because I'm conservative. I do the best I can, but it's a lot to me right now. So here's GameStop, and right now on GameStop, I'm up about $1,600 is where I'm at, and I have $25,131. Okay, so at $26,724, I'm doing pretty good for as much money as I have in there. Approaching a new high on shares every day, because I'm buying them every day. My activity has not changed. Activities and orders, same thing every day. Today, I filled in at $26.35, $30 worth, and that's it. For all you guys out there that are pacing $30, I know I did a little bit bigger here. That's fine. 25, 25, 10. It's what I can afford. Did a little bit bigger here. I get it. So maybe an extra $500. And you know what? It's okay. So I did an extra $500 more than just a regular daily day buy-in. Some people know when I hit it hard. Some people know when I take my time. But from the last month worth, I mean, we can do it really quick. Right now, calendar month turnaround. Well, just what I have here. This is the last 30 days. Last 30 days. So 24 plus 25, 25, 25 is 100. That's 99. 109, 119. And then you have 199. Right here would be another 50, but take away 2. So it would be 48, 47, 247. Right here would be 250, 270, 280, 295. Another 25 would be 320, 346. And then the big ones are going to be 546, 556, 576, 676, 678. 676. Oh my God, 686. 50 more. It's going to be 736. Let's see, 766. And another one to be 810, 1010. So 1010 plus a pending 30. So 1050 essentially. I'm just ballparking. So that'll be my last 30 days. So yeah, $1,000 is a lot of money to me. And I try to hit it when I can, depending on like what I'm doing, and I pace my bills and I pace my life outside of YouTube and work. But you gotta be really disciplined. But yeah, I'm happy with the number. I'm happy that I was able to put in $1,000 this month. We'll see if I can do more this next month. It's 3 p.m. Marantz. Yeah, not for me. I got you. 2 weeks until Canadian election. Get your calendars updated. Nah. I'm picking up a Raptor 8 this week. Dane Slayer, enjoy it, man. Yeah, absolutely. So if I can do 1,000 this month, whatever, I'm sure you guys can figure out how much you guys can do. And just pace yourself, okay? What I had said earlier, I didn't get to finish up on that idea, was if I'm buying into this stock every day, let's just say I buy $10. After 4 years, I will have put in $10,000. And all it cost me was $10 a day. You won't even feel it. You won't feel $10 a day. Because you probably get that taken from ATM fees, overdraft charges, and or upgrading value mails or some subscriptions to websites you don't even need and apps. None of that shit. $10 a day is nothing, considering there's 5 trading days a week. There's 250 trading days a year. $10 a day. And you would have 10,000 after 4 years. But then that 10,000 is going to grow. It's going to grow 10x. So what would you really have? You'd really have 100,000 for $10 a day. Don't believe me. Don't. But don't complain to me either. Don't do this whole, hey man, don't forget about me when you make it. I hate that shit. I already made it. And I already forgot about you. GameStop. Can't stop, won't stop GameStop. Tell these haters to know what it is. It's just us. I'll see you around, guys. You know what it is. GameStop. Can't stop, won't stop GameStop. I get around. Peace.